How to choose the right ETFs step-by-step guide. Are you ready to take your investments to the next level? Are you eager to unlock the secrets of financial success? Well, you've come to the right place. Welcome back, my fellow financial warriors, to the most epic and power-packed video you'll see this year. Today, we're diving headfirst into the world of exchange-traded funds, the ultimate financial superheroes that can supercharge your portfolio like never before. So, buckle up, grab your notepads, and get ready to embark on an exhilarating journey of wealth-building wisdom. Today, we're diving into the world of exchange-traded funds, ETFs, and helping you learn how to choose the right one step by step. Whether you're a seasoned investor or just starting out, this comprehensive guide will give you the confidence to make informed decisions. So, let's get started. Step 1. Understand your investment goals. Before we dive into the exciting world of ETFs, the first step is to understand your investment goals. Are you investing for retirement, saving for a specific goal, or looking for short-term gains? Determining your objectives will help you narrow down your ETF choices later on. Step 2. Assess your risk tolerance. Next, assess your risk tolerance. Are you comfortable with more volatile investments that have the potential for higher returns, or do you prefer a more conservative approach? Understanding your risk tolerance is crucial in selecting ETFs that align with your comfort level. Step 3. Research different ETF types. ETFs come in various types, from broad market index funds to sector-specific or niche funds. Take the time to research and understand the different ETF categories available. This will help you build a diversified portfolio that suits your investment goals and risk tolerance. Step 4. Compare expense ratios. Expense ratios are fees charged by ETF providers to cover operational expenses. When choosing an ETF, it's essential to compare expense ratios, as lower fees can have a significant impact on your long-term returns. Look for funds with competitive expense ratios that won't eat into your profits. Step 5. Examine the tracking error. Tracking error measures how well an ETF replicates its underlying index's performance. A lower tracking error indicates that the ETF closely follows its benchmark. Look for ETFs with a history of minimal tracking error to ensure you get the returns you expect. Step 6. Check the fund's liquidity. Liquidity is the ease of buying or selling an ETF without causing significant price fluctuations. Higher liquidity is generally preferred, as it ensures you can easily enter or exit a position when needed. Check the average daily trading volume and bid-ask spreads to assess an ETF's liquidity. Step 7. Analyze historical performance. While past performance doesn't guarantee future results, analyzing an ETF's historical performance can provide insights into its behavior during different market conditions. Look for consistent performers that align with your investment objectives. Step 8. Read customer review. Customer reviews can offer valuable perspectives on an ETF's performance, customer service, and overall satisfaction. Browse reputable financial websites and investment forums to see what others have experienced with the ETFs you're considering. Step 9. Consider tax efficiency. ETFs are generally known for their tax efficiency compared to mutual funds, but some ETFs are more tax-friendly than others. Look for ETFs with low portfolio turnover rates, as this can reduce the tax impact on your investments. Step 10. Seek professional advice. If you're still unsure about choosing the right ETFs or navigating the complexities of the market, consider seeking advice from a certified financial advisor. A professional can provide personalized guidance based on your unique financial situation and goals. Well, there you have it, a step-by-step guide to choosing the right ETFs. Remember, investing in ETFs can be a powerful way to grow your wealth and achieve your financial goals, but it's essential to do your research and invest wisely. Please note that this video is for illustrative purposes only and should be adapted to suit your personal style and content preferences. Additionally, keep in mind that the financial market is subject to risks, and it's essential to do thorough research before making any investment decisions. If you found this video helpful, give it a thumbs up and share it with your fellow investors. And as always, stay tuned for more informative videos coming your way. Thanks for watching, and happy investing!